US markets have plunged again this morning. This is after the US Federal Reserve Chair gave his strongest warning yet that the impact of tariffs on America's economy will be greater than expected. Joining us now is our business editor, Ross Greenwood. He's here at the desk with me. Jerome Powell spooked markets last night. Trump kept him there.
Yes.
But Jerome Powell, I guess, has tried to hold the floodgates back for a little while. So this has been his starkest warning yet, hasn't it?
There's a few little bits to unpack here. You're right. Donald Trump kept Jerome Powell in place, but then Donald Trump also indicated that he wanted to have a say about the future of interest rates in America. He's urged Jerome Powell in the past to cut interest rates even more. But now with these tariffs, Jerome Powell is now saying, really, the effect of them could be much greater than expected. Have a listen.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth.
Well, you know what that generally means. If you've got higher inflation, you have got higher interest rates as well. And that is really what impacted markets last night. Let's take you through them and show you what the US markets did. So there's the Dow Jones down almost 1.75%. NASDAQ, wow, that got belted. We'll explain why very shortly. That's about Nvidia, the artificial intelligence chip maker. NASDAQ down by 3%. And also the broader market, which is giving you a better view of the stock market. And in many ways, the S&P 500, which is down 2.25%. But really, it was that comment in particular that spooked people in regards to the US market. And therefore, again, sort of was this whole question about, what happens to the economy in the future as well.
Well, what about the longer term impacts? Because really what markets are doing is that they are a predictor or a forecaster of where they think the economy is going.
Sure.
So the longer this goes on, and they hate volatility, businesses want certainty, the more it looks like that it's going to persist or we'll see an economic downturn?
Well, that's it. And I mean, the whole notion of that big meltdown we saw last week was about the prospect of a global economic crisis and or recession. Now, that is something that Australia would get caught up in, there's no doubt. But again, this is really about whether this is just a short-term effect. Now, say, for example, if you increase a tariff and it's inflationary this year, but next year it's not inflationary. So you tend to see that central bankers like the Federal Reserve would look through that. It's a bit like if we have, I know, a drought here or a flood that actually causes prices to spike. Well, they look through that. But when they start to see that it's systemic, that it's going to be there for the long term, that's when you start to get worried about interest rates. That's when you start to get worried about the economy. Again, we go back to Jerome Powell. So this is Nvidia. Again, we want to show you this, the markets. I told you about Nvidia. Now, remember that Nvidia makes most of its chips right now in Taiwan. Donald Trump is now considering putting tariffs onto those who make semiconductors in other parts of the world. Nvidia is one of those. And yet Nvidia is all about the growth of the world because it is the key to artificial intelligence right now with its GRU chips, which are coming here to Australia right now. Now, the important part about this is just to figure out exactly what takes place next. And Jerome Powell really was saying, well, look, we just don't quite know exactly what happens next because we're yet to see the full outcome of these tariffs.
OK, so what about here? The RBA would be looking at this, absolutely, but surely you're making a late call given the rollercoaster that Donald Trump is.
Well, that's right, but you'd almost pencil in now the May rate cut, for sure. But the question is, how many more are we going to get? And the odd thing about this is, for Australia, just the impact. So I want to just show you our stock market to start off with. And this is today what's expected and also what Australia's got. So the share price index, see, not a big impact here. And so just down by around 1/3%. If we go and have a quick look at, say, for example, our long-term inflation, you can see broadly it went up. Now it's starting to come down. There's the reason why, again, people are calling for lower interest rates here. And then if we go, say, for example, to the longer-term impact of interest rates here, we know that the trend is for interest rates here to fall. Just one small thing, and that is Australia might end up becoming the lucky country yet again out of all of this, because as China tries to find other markets to put its manufactured goods that would go to the United States otherwise, it might drop a lot of them here in Australia cheaply. The second thing is, as there are tariffs which impact the price of goods going from America to China. And the big ones here are oil seeds. There are things like soybeans. Guess who makes those? Australia. And so it may be there's big demand for a lot of those products to be sold into China as a replacement for those American goods. So just a little thing here for Australia. It's a bit hard to try and get all the moving pieces. Global economic downturn equals bad, but don't expect that Australia is necessarily in a bad place in this trade war. In actual fact, we might be just in a really very bright spot.
We love the sweet spot, Ross.
There you go.
See you soon.